Welcome to the Amazon Legends podcast, where we have real stories about making it big on Amazon. Our guests are CEOs of large companies and entrepreneurs who became powerful sellers, also experts specializing in helping sellers, and both former and current Amazon employees who will give us an insight from behind the scenes. Here's your host, Nick Urison.
Hello, everybody. Welcome to another episode of Amazon Legends. Today, I have a lifelong entrepreneur, Nathan Hirsch. And Nathan and I met several years ago. He was running at the time the company he founded, FreeUp. And he's been an Amazon seller. He started FreeUp and sold it. And now he's running a service called eCommerce, who is a bookkeeping service for e-commerce companies, because it's a whole different approach. But what Nathan really knows very well is how to maximize the value of your company. And he does that by doing something that everybody finds boring and he turns it into fun. So with that, Nathan, welcome to the show. So tell us a little bit about what it is that you do very well, and now you made a business out of it. And how does it maximize? But more important, what happens if you don't do it well?
Yeah, thank you. Thank you so much. Excited to be here and good to connect again. I mean, I've been an entrepreneur my whole life. I've never had a real job, quote unquote. I started selling on Amazon back in college, and I got in the early days, the wild, wild west of Amazon, 2008, 2009. And I was selling millions of dollars out of my college dorm room. I ended up selling over $25 million over a 6-7 year period. But I didn't know anything about business. I didn't know anything about bookkeeping. The only way that I knew I was making money was either a spreadsheet or by seeing money go into my bank account. And I avoided bookkeeping like the plague. I would wait until the end of the year. I would take all my credit card statements, all my bank account statements, dump it on my accountant. He would spend 2 months doing my taxes. We'd file it, and then I'd repeat again the next year and the next year and the next year. And I did that for 6-7 years. And one of many reasons that I didn't have a success long-term on Amazon is I didn't know my monthly numbers. I had no idea what I was really making each month, what products were doing better than other products. And I couldn't make real business decisions based on my expenses or my payroll or anything like that, because I was going off of a spreadsheet and I was just getting numbers at the end of every year instead of every month. So when I ended up starting FreeUp, my business partner and I, we realized that was not the correct way to do bookkeeping. And we hired an internal bookkeeper from day one. And even before we were making money, the month would end, we would get a report at the end of every month within 10 days telling us our revenue, our expenses, a breakdown of fixed prices versus hourly. FreeUp was a marketplace for freelancers, or is a marketplace for freelancers, but we were able to make decisions based on real numbers every single month. And that helped us scale. And we scaled way faster. Within a year, within 2 years, we were bigger than my Amazon business ever was. And we got it to 8 figures, and we were acquired in 4 years by one of our customers. And one of the reasons we were able to be acquired was going through due diligence. We had immaculate books going all the way back to day one of our company. And every single question that the buyers asked us during the initial phone calls matched point on point with exactly what was in our books, because we knew our numbers really well. We had looked at every monthly report since day one. So when we sold FreeUp and we were kind of thinking, what adventure do we get into next? Well, what can we tackle? What can we build? Because we're entrepreneurs. The bookkeeping industry really intrigued us, because we interviewed over 150 e-commerce sellers, and a lot of them were either doing it the way that I used to do it, or they didn't really understand their numbers, or their bookkeepers didn't really understand e-commerce. So that's kind of a short version of how I got to where I am today. But it's been a lot of fun helping businesses really understand their numbers, have clean books, have books that meet what I consider e-commerce standards. And yeah, that's kind of my new venture.
Well, you just hit the nail in the head for the one major deficiency that I see in small business owners, because they do exactly what you've done at the beginning, where they find bookkeeping boring. They find numbers boring and overwhelming and frustrating. So they say, oh, I ask my clients, how do you get your numbers? Well, we look to our CPA. So this is the number one mistake. When somebody says CPA for their numbers, forget it, because the CPAs are designed to do one thing and one thing only, and that is to prepare tax returns. So the amount of money that they can make depends on how many tax returns they prepare, unless like they are on a bigger job, which they are not. So, so you do the math. How do you prepare the maximum number of tax returns? By spending the smallest amount of time on them, right? So how are you gonna know your numbers as a business owner, where numbers matter for your decision making, by looking to someone who doesn't really care about your numbers, but just your taxes? Because that's all they need to do. And they want to make sure, of course, I'm not suggesting that they just pull numbers out of a hat, but they try to make sense of what you have so that they can file a tax return that they can defend. But it doesn't give you your business performance, right?
Right. And I have a great CPA. His name's Elliot. I've worked with him for 10 years. He helped me sell Free Up. He's incredible. I recommend him to all our clients because we don't do tax. But his firm is not set up to do monthly bookkeeping. They're not designed to get it done quickly at the end of every month. They also have busy seasons. Like right now, we're recording this around the end of March. This is their busy season. They're trying to get tax returns done. Like you said, they don't have time for the monthly book. Same thing in October, where a lot of people are trying to get end of year numbers. They're focused on certain corporate filings. So there are some firms that do bookkeeping and tax very well together, but most CPAs, most tax firms are just set up for the tax side. And there's also some benefit of having two different parties, one party focusing on your books and your monthly books and the setup that you can actually read as an entrepreneur, and someone else being able to go through that, proof it, set it up for taxes, give feedback, and then you really have a three-person team working together to get your books in a good place. And I'll also add that I think being an entrepreneur, my business partner and I, we bring a unique perspective to the table because we're entrepreneurs first. We're not bookkeepers first. We're good at hiring. We're great at processes. We have an all-star team of bookkeepers, but we know what entrepreneurs need to see. We know what entrepreneurs like. We know what they don't like when it comes to books. And you have to be able to understand your numbers, and you need them presented to you in a way that you can really make business decisions on month in and month out.
Yeah. Yeah, I mean, financial performance data is very different than the financial data that goes on your tax return. So that is a whole different activity, so to speak. And frankly, it takes a different kind of skill set because it's more about analysis and structuring and so on and so forth. So now tell us about why this is even more important for e-commerce companies.
Yeah, I mean, e-commerce sellers are very complex businesses. I mean, you could be selling on different Amazon marketplaces, Japan, UK, whatever. You could be on Walmart and Amazon and Jet and all these different places. Then on top of that, you could be selling different brands, different products within those brands. And you really want to make sure that you're spending your time, your money, your resources in the right places. We've all kind of heard of the 80-20 rule when you're an entrepreneur, and that can really get messed up when you don't understand your numbers, because you see Amazon depositing money into your bank account each month, but you might have 5 products and 4 of them you're breaking even on, and 1 of them you're crushing it and you're making all that money, and you don't know that because your bookkeeping is not segmented. A lot of entrepreneurs have that shiny object syndrome where, oh, I can get my products on Amazon UK or Japan, or I can go on Walmart, but then they don't realize what is actually making money. And there's kind of a balance between diversifying so you don't have all your eggs in one basket and chasing that shiny object syndrome where you're not focusing on what really makes you money. Inventory also plays a big role in that. I mean, one of the biggest mistakes, I was talking to a friend of mine, Joe Valley, who works at Quietlight, or is part of Quietlight. I think he's one of the founders or higher up there. And he was telling me one of the biggest mistakes he sees is e-commerce sellers doing their books on a cash basis. And What happens when you do that is you buy $50,000 worth of inventory and that all shows up in March. And then your March looks like you lost money. And then the next few months looks like you make money, but you really have to do it on an accrual basis where you're showing money going in and out, but not necessarily at the time it leaves your bank account, more on when you've actually made the agreement to send the money or receive the money. And that's going to show you what you're actually making each month, not just where the cash is flowing, which is a completely different idea. And most businesses, when you go to sell them, you're not going to get as high of a valuation if you're doing it on a cash basis opposed to an accrual.
Okay, so this is a very important point. But unfortunately, as soon as you start using words like cash basis, accrual basis, people that you've lost them already, right? So for the benefit of the listeners, so let's talk about this and break it, really dumb it down and break it down to individual pieces. So I always ask this question. So when I work with my clients, one of the first things that I look at is what are the systems that they are using and how the systems are set up, and specifically about inventory account. And I ask, how do you do it? So very simple. I ask, okay, let's say that you placed a purchase order and the purchase order came in this month and it's $50,000 worth. How much money have you made? How much money have you lost? Say, I haven't made any money. Have you lost money? No. So buying the inventory is not a cost. Okay, so how do you book that into your system, into your books? Well, it's a purchase. Well, it's a cost. So now the books will show as a cost. So that means that as soon as I hear that, I know they are set up wrong. Because when you buy inventory, that's an asset. So It has to go on your balance sheet. So let's say that you buy inventory, and let's say that it's some unique product that nobody else has, and you pay $50,000 for it. And the day after you bought it and paid for it, somebody came and said, I'm going to write you a check for $100,000. Sell me that inventory. Until that point, you've got no losses, no income, no nothing, and you've got somebody. So he's basically buying your assets at that point, right? So it's all about the setup. So when you say accrual basis, you are actually talking about two things. One is account for your inventory in the right way as an asset, and also any expenses that you may incur, but you haven't yet paid the bill, also put them on your books. Because when you have accrual basis, you are showing your true liabilities, your true expenses, therefore, will show up. And then at the same time, you can plan for it. But if you do it on cash basis, they're not going to show up anywhere until you actually write the check, right? Which is a whole different thing. So it's a very fine point for us when we talk about it. You know, we know what we're talking about, but for an average, because it's so easy to start a business, but it's a whole different ball game to run it and then manage your numbers, right?
Absolutely. I mean, a simple way to think about it, if you own a lemonade stand and you buy cups, if you're doing cash basis, the second you swipe your credit card and it goes on your credit card, it goes on your books. Well, if you're doing accrual, maybe you have a vendor that you're getting cups, but you don't have to pay them for 90 days. Let's say you're on net 90 terms, but even though you haven't paid them yet, it still goes on your books because you've agreed to that purchase. So that's kind of how I look at it. And the other thing to keep in mind is the balance sheet becomes incredibly important when you're an e-commerce seller. For other companies like FreeUp, the balance sheet was not important at all. I mean, we're getting paid before we pay the freelancers. There's no inventory, there's no office, there's no real assets. Balance sheet was not an important part of selling the company. And we could even get away with doing the books on a cash basis because we're getting paid quickly from clients. We're paying freelancers pretty quickly afterwards. There's no net 30 or 90 or 60 terms or anything like that. 99.9% of e-commerce businesses are not set up that way. And they need to be on that accrual basis, and they need to make sure that they're keeping their balance sheet updated. one of the biggest things that we do, even if we don't, let's say someone comes to us, even if they don't want us to go back and redo their 2020, 2021 books, we need to fix up their balance sheet to make sure it's at a good starting point for 2022 going forward, because the balance sheet is incredibly important.
Yeah, and so this is another thing that I get hung up on. So, I've actually seen this with a client. So what happens is they keep them. The reality is everybody keeps their books in some shape or form. They're posting entries, right? Because they need to write checks. Of course, they don't want to write checks by hand. They want it to come out of the computer, so they post the bills. So people keep their books in some shape or form, not necessarily accurately, but there's something there. And then they hand over everything to their CPA. The CPA prepares the tax return. So now here is the thing that goes wrong. Whatever the CPA declares, he makes adjustments. He makes the year-end adjustments at best. At worst, he fixes a lot of things that were posted incorrectly. For example, you may have posted inventory to cost of goods sold, but he'll take it out and then show it as inventory and things like that. So he makes these adjustments. So then the tax return gets filed, everything is great. But if those adjustments are not posted to your books, in other words, your books are not fixed, and you simply continue running the same set of books over and over and over, you'll keep declaring the same broken numbers. And of course, your CPA is not going to know. And he's going to declare the same thing. And I've seen with a client, they had actually declared sales tax over and over and over, even though it wasn't there. They weren't collecting as much because they never fixed it. So the tax return adjustments must be posted to the books. And that's what you're talking about. If you don't want us to fix it, you still have to fix the at least the current year's opening balance on your books must match whatever was declared on the tax return, right?
Absolutely. And we get into conversation with clients all the time. We're like, oh, why can't you just start January 2001 or 2002 go forward? And we try to explain to them, like, we have to make these changes. We have to fix this up. You're going to benefit from it from that. You're going to benefit from it down the line. It's only going to hurt you if we don't do that. So it's a great point. It's also a good point of why your accountant and your bookkeeper should communicate. And it's also a good point where even if you're only using a bookkeeper for your books, you should make sure that bookkeeper has some tax experience. Like our head bookkeeper probably could file most of our clients' taxes, even though they don't, but it helps them from a bookkeeping side, make sure the books stay up to date. And it also helps them have intelligent conversations with the accountants that are preparing the taxes.
Yeah, this is really, business owners, even though they don't understand numbers, they understand profit and loss very well. So they are like a hawk, they are watching their numbers in terms of profit and loss, but they never understand the balance sheet anywhere near they understand profit and loss. So they just end up with a bunch of balances on balance sheet, on items, on line items that really have no basis for it. So what happens is, by the time you have to clean up the balance sheet, you have to write them all off. And then suddenly that becomes a huge loss or a huge income or whatever the case may be. And they say, oh, this is where did this come from? But there's, numbers are not going to disappear. So my point is, all this at the end of the day comes down to the value of your business, isn't it? If you have a broken balance sheet, and they're all over the place, whoever is writing you the check is not going to look at your P&L only. They're going to look at more your balance sheet, because balance sheet shows your liability, long-term, short-term, any assets you have. So tell us a little bit about the impact of this in the valuation of your business.
Yeah, I mean, we live in the day, an age of aggregators, right? All these aggregators are buying up e-commerce companies, and they're looking for deals. They either won't touch businesses that don't have clean books, or they're going to try to use those books that are not clean to get the best deal possible for them. And we actually get sent a good amount of referrals from aggregators saying, "Hey, we want to buy this business, but we won't touch it unless you go back and fix the books for the past 3 years." And then that seller ends up with a large bill. One way or another, you're going to have to pay for bookkeeping. My advice is to just do it right from day one. If you're behind, pay to get it caught up. It's going to be way worse if you have to do that last minute. And it all affects your evaluation. There's a trust factor too. I mean, I mentioned when we went and sold Free Up, when they're asking us questions on the phone and then it matches what they see when they get to due diligence and it goes into our numbers, that's a big trust factor. That's the kind of thing that helps you sell a company. When you say something on the phone and then they start digging into the numbers and realize, hey, this doesn't make sense, this isn't exactly what they told me, that's going to hurt your ability to get a deal, or at the very least delay how long it takes to get a deal. And I kind of mentioned, if you're doing it cash basis and not accrual, that's going to affect your multiple. And like you said, they're going to look at the balance sheet. Even if you don't like the balance sheet and you just want to look at the P&L, anyone buying your company is going to look at it. So you need to make sure that's been kept up to date.
Yeah. I mean, this is so critical. As yet, it's just so hard. It's it's like, they say that, oh, they should teach personal finances in school, because a lot of schools, a lot of kids grow up not knowing how to, reconcile their bank account. So it's like that. There should be some kind of a requirement for business owners to understand balance sheets and P&L together, not just, how much money I made, because life is all about building value, and the value you build does not show up on the profit and loss account. It shows up on the balance sheet because every year it's called retained earnings, right? It gets transferred, and you're building up, and that is the value in the end you're cashing in on. And as yet, people just don't seem to understand. So let's talk about, you said they should start from day one. So what is the right way for an Amazon seller to start correctly from day one? And let's talk about FBA and FBM, because it changes things, right?
It does. I mean, here are your options, right? You can hire a CPA to do your taxes and your books, which you already talked about, or a firm that does bookkeeping and tax work. Maybe they have separate departments. You can hire a full-time employee to do your bookkeeping, which most sellers aren't ready for on day one. You can hire a virtual assistant to do your bookkeeping, which could be good, could be bad. It's something you just need to be careful about. And I would argue the less you know about bookkeeping, the less you should hire a virtual assistant to do your bookkeeping, and the more you should pay for bookkeeping. Or you can hire a service like eComBalance, and there's other ones out there, to just handle your bookkeeping month to month. And they're also there to answer questions and support you in any way. So you should not be doing your own books as an entrepreneur for really two reasons. One, it's not a good use of your time. Like, any time that you're spending doing your books is time that you should be spending growing your business, doing sales, doing marketing, finding new products, getting on new marketplaces, whatever it is. Almost every entrepreneur that has had any success is not spending 20 hours a month doing their bookkeeping. Second of all, you're probably not going to do it correctly. Most entrepreneurs are not CPAs. They're not bookkeepers. They can watch some YouTube videos, take some courses on doing bookkeeping, but they're probably not going to do it right at the end of the day. And it's probably just going to have to get redone later. I know I spent so much time with my Amazon business trying to do the books myself in year 1, 2, and 3. And then I just had to pay afterwards for someone to redo all that work because I didn't really know what I was doing back in 2010, 11 as a college kid running my first business. And you can learn over time and you can get a little bit better, but it's not a good use of your time. So get in the mentality that someone else besides you should be doing your bookkeeping, and then look at what those different options are. I already went through them, the full-time employee, the VA, the service, the bookkeeper, the accountant, all of those, and decide what makes sense for my budget. You can do some price shopping, but figure out, how do I get it so the month ends and within 10, 15 days, I get all the reports I need day in and day out. If you have a bookkeeper that's constantly falling behind, they're doing it every quarter, they're only doing it at the end of the year, whatever it is, that's not going to do it for you. You need to be able to make decisions month in and month out. And one of the first things you should set up in every business is who's going to do my bookkeeping and how am I going to get these reports on time every single month so that I can make decisions month in and month out.
So this is something that I've come across a couple of times. A lot of the times people don't understand, business owners don't understand numbers and they need help. So what is the best way to identify who is actually knowledgeable about the subject? Because you hired the wrong person, because I've seen these people. They said, we kept hiring people and they would stay a few months and then they would leave. And they never knew. And then I would come in the picture late in the game, and I would find that they've done so many things wrong. And basically they had no idea what they were doing. So there is a lot of pretend bookkeepers, pretend services out there. So how do you know the right ones and pick the good ones?
Yeah, I mean, there's reviews and there's referrals. That's one way. My personal favorite way is to get your accountant, get your CPA to proof your bookkeeper's work. If I'm a new seller and you've got that CPA, hire a bookkeeper, have them do a month or two of work, pay your accountant to review the stuff and give the feedback. You can also hire higher level bookkeeper consultants. Maybe you have a friend higher up. But another tip is just avoid anyone that doesn't know e-commerce. There might be bookkeepers that have been doing bookkeeping for 10 years and they have a lot of experience, but if they've never done e-commerce or you're their first e-commerce client, you don't have time for that. You don't have time to teach them e-commerce. It's a whole different ballgame when it comes to bookkeeping. So what you need to do as an entrepreneur is you can't avoid numbers completely, but you also don't need to learn how to do bookkeeping. There's an in-between. You need to be able to look at a P&L, look at a balance sheet, look at a cash flow, and look for red flags. Even though back in the day, I didn't know bookkeeping, I could still look at a P&L and say, hey, this number doesn't make sense, or hey, this is a red flag. And that's another way to vet your bookkeeping. Spend time learning how to read a P&L, read a balance sheet, read a cash flow without actually having to do it, along with using your CPA to vet any new bookkeepers that you're adding on.
So the other things, share with us if you can, because a lot of the conventional people will advocate doing things manual because their idea is, well, I know exactly where things go, so that's why I want to do it myself. But as you know, e-commerce means volume. High volume means automation. So therefore, a lot of the bookkeeping entries need to be made in an automated manner through systems. So can you share with us some examples of what is best to automate in your bookkeeping and what is best to do manually, even though it's possible to automate? And what are things that there is no automation, you have to do manually, religiously on regular basis?
Yeah, if you're a smaller seller, you might be able to have a bookkeeper that does most of it manually and get away with it for a little bit until you scale. One of the first things we automate for all our clients is using a tool called A2X, and that brings in all Amazon sales and really organizes the fees. Amazon reports are not great. They can be different for every single seller and every single marketplace. It can be very tough to realize what you're actually making. And like you and I talked about, most sellers make the mistake of just grabbing what's deposited into their bank account and putting that into their books. And that's not the correct way to do it. You want to have total sales minus Amazon fees, and then the net actually put into your book. So that's one of the first things to automate. If you hire a bookkeeper and they're doing Amazon reports or Walmart reports or whatever it is manually, that's a red flag unless you're super small or have a super simple business. Now, expenses and stuff, the way that we like to do it is we like to do a run through to really get to understand understand someone's business, because you might get in there and there's some transactions that aren't labeled properly, or you have some questions about what stuff is. But most businesses, they end up making 90% of the same transactions month in and month out. And then you can start to automate, hey, we got these transactions, but we know from the past 8 months that this transaction is this. So it's just kind of a combination of manual and automation there. But the automation usually comes on that sales side. And then inventory can be pretty complicated as well, just depending on how you want to set it up. We have two ways you can do it. One, if you're using a tool like Inventory Labs or whatever it is, and you're providing us cost of goods, we'll just plug that into your books every single month. Or we can do a cost of goods averaging to average it out over a period of time, which is another way. It's kind of the shortcut version that's still GAAP approved and still helps you understand your numbers, but doesn't require you doing intense inventory management that not every single seller needs to do.
Yeah, so the inventory accounting is a whole different ballgame. So you have two things in play. First of all, when you make a purchase and the inventory is delivered to you, that needs to go on your balance sheet. And then every time you sell an item, the value of the inventory must be transferred from your balance sheet into your cost of goods sold. So what happens if your cost is changing, right? So if you bought 100 pieces at $10 and then another 100 pieces at $12, what is the cost of your sale? So until the first 100 is sold, obviously it has to be done at $10. So that's what you're referring to as averaging out, or doing it. Tell us a little bit about how you handle that part.
Yeah, and this is kind of borderline of why I hire very good bookkeepers to kind of help this part of it. I mean, we have clients who have very complex inventory systems, and we have clients who do print on demand, which makes it even more complex, because then they've got all these different vendors and they're buying one thing and then it's getting shipped to another place, and then it's getting customized, and then it's getting sent to Amazon, and then it's getting sold there. So the inventory can be as simple as just averaging out, like you said, if you've got 10 and 12, and then maybe you're selling the 10 first, or you're just averaging it out. Or it can be very complex where you need that Inventory Labs or different software, or some people will use spreadsheet to get it done. And then it just depends on how good your system is. And if you already have a good system, we're not trying to go in and break it. We're going to go in and either get the numbers from you each month, or we can take it over if it's already set up. Or if you don't have a good system, that's usually when we refer to that cost of goods averaging, because you're still going to get a very accurate picture of what you're making every single month, and your balance sheet and everything is going to be correct. But you're not going through that complex phase of what I would consider the next level of inventory.
Yeah. So really, Nathan, what I'm hearing at the end of the day from you is, doesn't matter whether it's e-commerce business, but if it's e-commerce, especially Amazon, you have to do this for every business. You can't just come up with a business idea and then start shifting merchandise. You have to think about, how am I going to account for this? How are we going to treat this event and that event on the books? Because ultimately, that's going to maximize the amount of check that somebody is going to write you for your business, right? You have to think about it ahead of time before doing things.
Yeah, absolutely. I mean, every entrepreneur, you got to have a lawyer, you got to have an accountant, you got to have a bookkeeper. I mean, those are kind of the three basic things, and you got to spend time up front getting your system set up. Something like inventory can get really messy very quickly. And if you have to go back and figure out a year worth of inventory, a year worth of cost of goods sold on different platforms over a long period of time, that can get very costly, very time consuming. It can pull you away from what you should be doing. And it's always faster to just get it set up right from day one. Even if it takes hours up front, it's way better than trying to fix it later on.
Yeah, exactly. And also, let's say that you are fortunate enough for somebody to be interested in acquiring your business. That's a process, right? It takes time. And they're going to go through your books. They're going to go through your operation. They're doing their due diligence. And it's already a fairly arduous process. And by having books that are not really well organized and clean, you just make it even worse. And the whole thing takes longer, and you may lose them in the process because they lose their trust, as you mentioned earlier, right?
Our due diligence lasted 6 months, part of that wasn't anyone's fault. Part of it was lawyers taking a long time to kind of go back and forth, but that's with immaculate books. Our books could not have been cleaner, and it was stressful. It was long. Keep in mind, while you're going through due diligence, you may or may not sell the company. The buyer could drop out at the last second, and you don't want to neglect your business for 6 months. So while we're going through due diligence, we're also trying to run this business, grow this business. We might be going back to this business and continuing to run it if we don't sell it. So that becomes a nightmare if your books are a mess. And if you have to pay a bookkeeping firm to redo your past 2 years of books, it's not like that bookkeeping firm is going to drop everything and get your books done in a week. That could be a month, 2 month, 3 month process. So due diligence is already a long process, not to mention when you're waiting on a third party to get that stuff done, even though they might be working as hard, as efficiently as possible. And there's a lot of back and forth in there as well. If we're redoing someone's books for the past year and it's a mess, there's points where we have to say, hey, let's go to the owner of the business and figure out what these transactions are or why they did it this way. Then we can get back to work. So, hey, due diligence can be stressful. It can be long. The way to make it easier is to have clean books from the beginning and not wait until the last minute to get everything fixed up.
Yeah. And if you haven't started the right way at the beginning, the sooner you get it cleaned up, the cheaper it's going to be for you in the long run, right?
Absolutely. Having clean books makes everything better. And remember, even if you don't sell your business, the main goal of the bookkeeping from your side as an entrepreneur is to make good business decisions every single month. Should you hire more people? Should you let someone go? Should you expand to other marketplaces? Should you focus on making your current products profitable? Should you buy more inventory? Should you maybe make a smaller inventory purchase? You can't make these decisions just by a spreadsheet or just by looking at the money going into your bank account or by just looking at your tax return at the end of the year. You need to be able to make those decisions month in and month out and make them quickly.
Yeah, exactly. Now, something you said about firing is a good segue to my next question. So in your experience dealing with e-commerce companies and Amazon sellers in particular, what is the makeup of a good team? And describe to me the roles. What should people absolutely make room for, mentally prepare themselves that I'm going to have somebody for these roles? So what is that makeup and what does it take to be successful?
Yeah, great question. So I actually own another company called Outsource School, which teaches our hiring processes. And it's really the exact process we use to hire people at all our businesses. It's something that we built 7 years ago, and we've been using it ever since to hire all-star people. But in terms of the setup, I mean, think of the different teams that you have. You've got a marketing team that person might handle PPC. You've got an operations team. Those people are filling orders. You've got your bookkeepers, your lawyers, your accountants, which are kind of like a separate thing off to the side. And then you've got that CEO or that person who's running it up above them. And the goal is to make all those teams communicate and work together in the same process. The person who's listing the products should be talking to the PPC person. The customer service reps who's dealing with the customer issues should be talking to the operations manager. So something along those lines of breaking it down. So you've got the marketing, the operations, the customer service with someone above managing all of them. That's the most simple version of it. And then you can kind of streamline it down where, hey, you've got someone doing listing, you've got someone doing graphic design, you got someone doing videos. Well, what I like to do, especially if you're a smaller seller and you're not doing 8 figures, is all the creatives. You want to build a Rolodex of creatives that you can go to. You don't, every time you have a graphic design project or you need a listing being written, you don't want to have to go hire on the spot. You want to have 3 or 4 listers, 2 or 3 graphic designers, 2 or 3 video editors. They might have other clients, but whenever you have work, you've got these people that you've already worked with, they trust you, that you can go to, and then they'll deliver the work to whoever is putting the final touches on that listing. So figure out what those main full-time roles are, and then also create a Rolodex of reliable freelancers you can go to for different projects that you can use in multiple businesses, multiple brands. The same video editors we're using in Ecom Balance. We also used it Outsource School. We also used it Free Up, and you can actually bring them from business to business.
So in your experience, what are certain roles that are best to be outsourced rather than hire a full-time in-house person?
Yeah, good question. So hey, keep in mind, I ran a drop shipping business. So anything that was communicating with suppliers, anything that was customer service, anything that was actually filling orders and tracking orders and making sure they were delivered, all of that we outsourced to the Philippines. Then you've got the freelancers, the creatives. Those could be US or non-US, but those are more freelancers. They're not full-time and exclusive to you. Where the customer service reps, it takes a long time to train someone in customer service. So those are people are full-time, they're exclusive to us. Whereas that lister or that graphic designer, they might have other clients. Same thing with an operations manager, someone who's actually managing the Amazon account. You want that person full-time and exclusive to you. And then with marketing, you've got different options. You can hire a PPC agency. You can hire a full-time marketing person internal. That's not something I would necessarily outsource to the Philippines, although there are some great hires out there if you spend the time to really vet that.
I see. And the financial management?
So keep in mind, Connor and I are very good at outsourcing. So with FreeUp, we hired a bookkeeper in the Philippines who is awesome. For most people, that's not sustainable or that's not something they can do. So your bookkeeper, your lawyer, and your accountant are usually US based.
US based. Okay. So so tell us a little bit about what seeing the e-commerce business from numbers standpoint. Tell us a little bit about what you see as the opportunities in the future in e-commerce companies, and also what are the challenges that come with it?
Yeah, I mean, we live in the day and age of businesses being bought by aggregators, and they're looking for brands. I think the days of the wild, wild west of Amazon where you can list anything and just sell it for a long period of time are over. There are some things you can do to make some money quick, but I would argue those are not scalable. What you need to focus on is how can you actually build a brand? How can you actually build something that's going to be around in 5, 10, 15 years that actually has a good sustainable profit margin that can handle supply chain issues, that can handle Amazon fees being raised or competitors coming in. A lot of these smaller margin businesses struggle in times of crisis or times of change. So that's something to keep in mind, where the companies that survive now are really focused on building a brand, having a presence maybe outside of Amazon, having an email list that they can control, but also having the margins that can support them if things go wrong. And I guess the other thing is just cash flow. Cash flow is king when you're an e-commerce seller. A lot of e-commerce sellers go out of business, not because they're not profitable, but because they're not managing their cash properly. We have a client at Ecom Balance who's very seasonal. During the summer, they sell a lot to college students. So during the summer, when colleges are out, they really don't make that much money, even though they're above an 8-figure business. So they need to make sure that they have a lot of cash on hand, and they project their cash flow out 12 weeks at a time, and they're within like $1,000 every single week going 12 weeks out. And they need to do that because they need to make sure that they can pay their employees and not have to let them go in the middle of the summer. So to me, those 3 things are incredibly important: making sure you have a good profit margin, make sure you're growing your brand, and make sure you really understand your cash flow and have a good cash flow for your company.
And what is a good margin?
I mean, if you can get to 40% or above, you're killing it. Sometimes that can be unreasonable, but 25% to 35% would be at something to shoot for. And if you fall in slightly below that, you can still get by.
And when you say margin, define the margin to me.
Yeah, so that'd be net after fees, after paying people, all of that. But I don't know, you're kind of the consultant in the space. So I'm curious what you see as well when it comes to margins and what's realistic. Because in my mind, like you got people who were making very high margins, and then supply chains came in, and all of a sudden those high margins didn't look so good anymore. So what are you seeing?
Well, I break it down into buckets. So the first one is the gross margin. Gross margin is how much are you paying for the merchandise that you sell as a percentage of the sale value. So if you're selling the item for $10, how much are you paying to buy the merchandise? This is the landed cost. It does not include Amazon fees or even credit card fees. It is just you sold one piece. How much did it cost you to land here at your warehouse for the dollar that you're going to spend. So I like that to be around 20 to 30%. So in other words, for $100 sale, you spend no more than $20 to $30 on the merchandise. Now comes the Amazon fees. That's 15%. And then you have your fulfillment fees. So what I like is I like that bucket, the fulfillment fees bucket, to be no more than 12 to 16% of the total sale value. So now you do the math. You made a $100 sale. You pay, let's say, best case scenario, $20 to the merchandise, $15 to Amazon, another, say, average 15%, another $15. So that's 15, 15, 30 plus 50. Already 50% spent before advertising. So I say, allow, if you are building your own private label product line, you need to advertise, right? So I say, allow 20% of your sale on advertising. So now you are up to 70%. So now that leaves you with 30%. And then this is, you have the, what do you call, other incidentals like storage and bits and pieces. So that's 5%. So that leaves you with 25%. So keep in mind, we started at 20% gross margin, which is very good. So if you're spending 40%, you've got 5% left.
Right.
So this basically brings you back to what you mentioned right at the beginning. You have to know your numbers in order to make the business decisions. If your money is being spread around like this across these multiple ways that money gets consumed out of every sale, you know, and you don't know what those numbers are, how can you even run your business? Now, here is the real danger that I always see. Let's say that you have 25% net margin. In other words, out of every $100 you spend, you bring in sales, you put $25 in your pocket. And let's say you do $100,000 a month. So now you know that you are taking home 25 grand every month, net, after everything. How much inventory are you carrying, right? If you're carrying 3 times your monthly sales, your monthly earnings, even though it may be healthy, may not be enough to finance the inventory you have to keep buying.
Yeah, it's a great
point.
point.
Yeah, so that is the point that you are making. You may be profitable, but if you don't know your numbers, then how can you operate? You simply go out of business. So that's what I say. Your biggest, and this is it's a liquidity ratio. You need to know how much net liquidity you're generating, net profit you're generating every month, and then how much inventory you're carrying at all times, at any one time. So if you've got $100,000 worth of inventory, it's going to take you 4 months just to make enough money to finance your inventory back.
Yeah.
So, I mean, that is the killer to me. What is your take on it?
And no, I completely agree. I mean, there's also other solutions, whether it's getting investments or funding or using something like payability or getting Amazon loans or whatever it is. But you have to manage your cash flow, like you said, especially just depending on how much you're buying inventory and how often you're buying inventory.
Yeah, yeah. So, so tell us a little bit about your knowing, you know, you dealing with so many Amazon sellers. What is one common complaint they have about Amazon and in terms of Amazon policies?
I mean, it keeps you on your toes, right? Like they can change things at a blink of an eye, whether it was the review fiasco that happened towards the end of last year, or changing fees or storage fees or whatever it is. I mean, competitors, hijack listings, all of that stuff. I mean, I've been selling Amazon I've been in the Amazon space since 2008. So I've seen it all. I've seen everything change kind of across the board there. I think the real sellers, the people who are really crushing it, kind of know that Amazon's changing and they're trying to stay 5 steps ahead of it. They know what's going on in the space. I mentioned they also might be diversifying, but they're also they're using those tools to make sure they always have enough cash, whether it's getting those inventory, those Amazon loans, or using the payability companies or whatever it is. Yeah, those are kind of the common complaints. I'm sure you've heard kind of the same ones.
Yeah. I mean, what I usually hear is that the constant change that Amazon goes through is catches people off guard sometimes. But the bottom line is you have to expect that Amazon is going to change the rules anytime, and be on the lookout. You can't be thinking that whatever you do once is going to continue. And also their support. I hear that their support for sellers is pretty poor, and people complain about it.
I'll tell you my complaint. It blows my mind that Amazon still requires you to use a tool like A2X to really get sales numbers to QuickBooks. I don't know. I don't understand how they haven't figured out a good way to get good sales data, good fees in a way that's compatible with QuickBooks or Xero to just get that to the seller, and why it requires a third party in the middle to organize data.
Well, it's an ecosystem, right? So Amazon is also an ecosystem. So you have that there is all kinds of things. They also, Amazon is one of the most secretive companies. They don't want to give you everything. So that's part of the way they qualify sellers. And I think they submitted a report to the Congress, X number of million sellers on the books, but only a fraction of it is actually an active seller. A lot of people just drop out because it's a very complex platform. So anyway, so Nathan, this is the kind of conversation that people don't find interesting, but as yet it is so critical, and you made it fun to listen to for me, and because you've been through it yourself in terms of how it benefited you. So this was great. So tell us a little bit about yourself, and where do you live, and what do you do outside of work, and also give us your contact information. We'll put this on our website and also on our YouTube channel. But give us all the contact information, how people can reach you.
Yeah, I live in Denver, Colorado. My wife and I and 2 dogs, and we actually recently became foster parents. So it's kind of our way to give back. I think both of us are very fortunate that we had loving, caring parents. And although we didn't grow up rich or anything, we were either poor or middle class, depending on how you look at it. We kind of take for granted a little bit, just having food on the table, having a roof, having that really great parents. And it's kind of our way to give back to kids that haven't had those same opportunities, and hopefully help them in the long term. Anyone that wants to get in contact with me, Nathan Hirsch, you can find me on any social media channel. Check out Ecom Balance. You can submit a quick form to get a quote on your company. You can also go to outsourceschool.com and check out my hiring process.
Great. Thank you, Nathan. This was great. So everybody, this brings us to the end of another episode. And you've heard it all. You got to know your numbers. If you want those fat checks being written for your business, you got to know your numbers and keep your books in order, and ideally start from day one. And thank you again, and I'll see you next time.
Thank you.
Thank you for tuning in to today's episode. Be sure and subscribe, rate, and review our show. And be sure and share an episode with a friend. And thank you so much for being with us today. We'll see you next week here on Amazon Legends.